Uh, Let's move on now and let's welcome our Alpha Manager for the day, Srinivas Ravuri, CIO-Equities at PGIM India Mutual Fund, is joining us. Srinivas, good afternoon. Sorry, we becoming a bit late to you. We had to deal with all the volatility in the market. But what are you telling your investors right now after this big rally and today's warning?
Yes, Anuj, I think last 2 months have been a fairy tale for most investors. I think you pointed out money making seems to be so easy in the last 2 months, which is not a good sign at all. In fact, as can be seen from many years reports, I think many online broking firms have reached the top charts in terms of investors trying to find out how to invest or trade into markets. And we are actually seeing mutual fund industry seeing outflows. So this again highlights that I think last 3-4 months we've seen a one-way rally in markets, whereas we've been cautious and we remain cautious on the outlook for equity markets. Yes, things have been much better than what they were, but I don't think this kind of a rally is warranted. Especially on the kind of response we are seeing to the IPOs and the kind of subscription that we have seen clearly says that things are not okay in the equity markets right now, Anuj.
Okay, Srinivas, thanks for joining in. Now, let's talk about it. Today is a big shake-off, but let's talk about the rally so far. Did you ever feel that there was any excessive enthusiasm pocket which didn't sort of fall in place in terms of your thesis? Let's say the kind of buying that had started in road contractors or even PSUs, a lot of the oil and gas upstream names. Any caution that you would like to place on the table?
Yeah, Surabhi, I will not say the oil and gas or the PSU space. I think, that space is an extreme value zone. That's a different debate in terms of value versus growth. But in terms of excesses, I think, Surabhi, 2 points. One is the IPO thing that I mentioned. The second is kind of stocks that were hitting 10%, 15% circuits in the last few weeks, in the NSE. There is no need to take names, but quite a few questionable names were going up. That again warrants a caution. I would say I think these are the two things. PSUs or the energy stocks trading at single-digit PE, 5% dividend yield. I think there is a definite need for a bit of a rally in those stocks, given where they are. It's still debatable, whether this rally, today is an exception or will we see recovery in those stocks. But overall, I think there are certain pockets where we could clearly see excesses, Surabhi.
Okay, so Srinivas, in that case, what's the portfolio approach now? For the time being, just get back into the safety of, say, pharma and IT, or is there a different strategy?
Anuj, I think we've been adopting that strategy all along. I would say last 7-8 months, we've been overweight financial. We as a mutual fund across our mutual schemes, equity schemes, you will see two sectors that we are overweight are pharma, and the second is IT, and third is chemicals. And across our funds, we are underweight financials. November has been not a good month for us. Because of this reason, we've seen a very sharp rise in the financial, especially the high beta names, that has impacted our performance. But still, overall, we're doing extremely well, given this approach that I think there is no need to take excessive risk at this point of time. We remain overweight on pharma, IT, and chemicals, Anuj.
Okay, all right. So, Srinivas, tell us a bit more on mid caps, because that was also the pocket where there was so much of action. You mentioned stocks going up in the 10% zone. In terms of themes, I know you can't give us names, but in terms of mid cap themes, what is topping your buy list as of now?
No. So we have a reasonable exposure to mid caps. I don't think we have any. We are averse to mid or small caps, but what is important is at what price you are buying and what kind of a margin of safety you are building in when you are buying a stock. So we've done, our diversified fund has done extremely well. It has about 20% exposure to mid caps. So we are not per se negative on mid caps. I think diversified fund is a better place to play for an investor. But at the same time, I think what price you pay is extremely important, and that is what one has to keep in mind buying, whether it is a small cap or mid cap or a large cap.
Okay, all right, Srinivas, and we will wrap it up on that note for today. Thank you very much for joining on what's been quite a shakeout day for the market. Well, we do have to take a quick break. Let's just turn our eye back onto the screen. Still down about 420 on the Nifty, Bank Nifty, some recovery, but it's still fairly fragile to say the least. Even the recovery is kind of always getting sold into. Let's see, 10 minutes of trade left. Before we take a break, here is something that you, our viewers, must take note of.